day traders, Raghee here, and in this update we're going to talk about some of the morning trades and continuing to embrace this idea that if we can have a well-rounded trading approach, meaning not just futures and currencies and the grocery store futures contracts, the commodities that I love so much, but even understanding how that affects our stock trading, our ETF trading, etc., we're going to find a lot more opportunity and better ones at that. So I love a futures first approach because it embraces the fact that a lot of stocks are going to be moving because of the broader averages, because of some main commodities like crude or gold, and that cohesion, that connectiveness gives us a better opportunity to see relative outperformance, and also allows us to see when certain markets are going to outperform, when they're more likely. Well, case in point, everything was up earlier this morning, which brings me to the first point of this video. We start at 9:30, we wind down, really starting at about 11, but end at 11:30. My day trading entries are only in this 120-minute window, which means after 11:30, all I'm interested in is managing the open positions that I have already taken. I'm not looking to trade through the midday doldrums. I'm not looking to trade into the close. 2 hours a day, that is it. And if you've been a day trader for any length of time in your life, you know that day trading all day is exhaustive and actually ultimately counterproductive. Next, why do I like the Dow? Well, in terms of the strength of the four indices, and I really focus mostly on three, Dow, Nas, S&P, the Dow is still the relative outperformer. In fact, in terms of longer term trades that I have on swing trading, we're long healthcare, we're long financials, we're long the industrials, we're long transports, and we're long the Dow. And they're different corners of related markets, but there's that connectivity. So the day trade to the long side is an easy one for me to take, meaning I like when there's bullishness on the daily, and that's going to feed my confidence and directional bias intraday. So what do we have? Well, let's get a little bit more granular to this intraday chart. Breach, that was basically step one. Now breach is when we take out the clearing range high. Retreat, that was basically two. That's the zone where I'm getting long. And then after that, we'll use a number of different kinds of levels, from V-score to HPMR to major psychological levels, etc., to manage our targets. And the important part is, as you're managing your targets, as you're going from this entry in this number two zone to your targets, remember, we want to practice a very simple pay yourself while you can, not when you have to approach. Meaning, I don't want to assume that my first target is somehow magically going to pinpoint the high of the day. I know that as long as the momentum is going in my favor, I can scale out of the position, whether that be DIA calls, YM futures calls, or the YM or the micro, mini or micro YM. So ultimately what we had were two different targets that were hit. And as we're moving from target to target, we're also ratcheting up our stops from break even, from risk-based to break even initially, from break even to trailing, and then we continue to follow the trend up until the market decides to take us out. And so ultimately, the best thing that we can remember is that the market dictates how much it's going to move. The market's going to dictate how much it's going to pull back, and all we can do is counterpunch. So what I really practice is more of a counterpunch day trading approach. You never want to give yourself too much credit for days where, in this case, we had a nice 100+ point move in the Dow. My job was to have the directional bias, get long on the pullback, and get the heck out of the way. And as I like to remind everybody in the room, sometimes it's like that little clip from The Last Dance. If you all saw that on Netflix, the multi-part documentary about the Chicago Bulls' pursuit for that third championship, that next three-peat. And there was this one scene where I think it was Steve Kerr, who, what a nice guy he seems to be. Steve Kerr says, what was the plan there? And I think he said, give Michael the ball and get the bleep out of the way. What I want to do here is, we've given the Dow the ball, as long as the structure is proving to be one that we can say, get the heck out of the way, propulsion dots lit up, grab candles are green, the structure is green, get out of the way. Let the market keep moving. Don't try to play counter trend. Oh, it's gone too high, let's short it. Just pay yourself while you can, not when you have to, focusing oftentimes on major psychological levels. All right, you don't have to make it complicated. And this is what we did this morning. Now, in the premium video, I'll jump a little bit into some bigger picture macro factors that are in play. But just to show you again, you want to embrace both the long and short term. We had a fade buy in crude off a V-score low, which ultimately gave us a pretty nice little move to the upside from 62.40. And we surfed the wave on the S&P. So once the Dow was strong, the NASDAQ was very strong. We just looked at where we could play more aggressive pullbacks on the 1-minute chart of the S&P and did our very best Laird Hamilton impression, surfing some big waves here in the S&P as the risk appetite was definitely underway. I'm trying to get you all over to the look. There we go. So surfing the wave of that S&P when it would just come back to the 34 EMA high close low. All right, that was today. Short-term time frames frees me up to, and take a look at the left here. I'm showing you guys this for a reason here. This is what we're going to discuss in the free video. So this morning, 1 minute, 5 minute. This afternoon, the amazing trends we continue to take advantage of in a lot of these markets. So I switch on over to a daily, and now I can take advantage of the larger trends, not trends that I'll take advantage of for a few hours in the morning, 9:30 to 11:30, and maybe a little bit beyond. But now switching gears, quite literally switching time frames and time horizons to take advantage of bigger moves. Make sure you're taking advantage of multiple time horizons and time frames. Have a well-rounded approach to the market, and I'll see you in the next update.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me